It's Thursday the 12th of September. I'm here at Jazz FM Studios with Jonny Hart from the Business Breakfast to record this week's Market Insights podcast. This week we discuss the ECB meeting, look ahead to the Fed meeting next week, talk about the US-China trade war, Brexit, the Bank of England and the Bank of Japan. Don't forget to check it out, and as always, leave any feedback below.
There's a kind of perfect storm of financial news as well on all fronts, isn't there? We've got the announcements from the ECB, from Donald Trump, from the White House, from the US Fed. We'll talk more about that later. And of course, we've got the stuff closer to home going on with Brexit and Bank of England next week. One doesn't really know where to look half the time. Very, very difficult for anybody trading out there to know which way we're going to go.
Yeah, it's quite an incredible landscape. It really reminds me of kind of the 2011, 2013 period where there wasn't one thing to focus on. Yes, everyone was focused on the debt crisis, but which part of the debt crisis were you focused on? Italy? Were you focused on Greece? Were you focused on Germany? Were you focused on the UK, the US? What was the key focus? What was the key driver for people? There was headlines right, left and centre. There was never a quiet day, what felt like for years. And it feels like very much that's now. If you're not talking about the trade, well, you're talking about Brexit. If you're not talking about Brexit, you're talking about a German recession. If you're not talking about a German recession, you're talking about a China slowdown. The list goes on. There's always a headline every day, and that very much is what we're going through right now. And that's obviously then exacerbated when you have a week like this, a week to 10 days, should we say, where we have the ECB meeting today. We've got the Fed meeting next week. We've got trade headlines popping up right, left and centre through it. We've got other central banks as well, as you've already alluded to, meeting as well. We're not even going to talk about this, but we had the Turkish central bank cutting interest rates by today as well, and exceeding expectations for a second consecutive meeting. But that doesn't even make the headlines because there's so much happening elsewhere. It's about narrowing the focus in, and at the moment markets are very much narrowed in on the ECB and the trade war. And tomorrow will probably be back to Brexit.
We have more data from the Bank of England next week, although you're not expecting too many surprises really. You mentioned the landscape, the crazy landscape of Brexit, and could it get any more crazy? I mean, this time last week we were talking about a mad rollercoaster week, and it's getting even more weird.
Yeah, I mean, the next week, the data that we're getting is, you could argue it's insignificant from the UK because ultimately, well, the Bank of England takes into consideration current data when determining their interest rate policy, but that's because you can see a trend forming and you get an idea of where it's heading. You know what the global risks are and you know what the domestic risks are, so you can make a judgment based on the current data and the expectations as to what the correct level of interest rate should be at the upcoming meetings. The difficulty that the bank has right now is you could say, yes, do you know what, inflation's at target, so it's not necessary to move. We've got, I think, retail sales next week, and that's expected to be moderate, but it's not going to be great. But then you think, well, the Bank of England is not going to be sat there saying, well, the data's okay now, so let's start raising interest rates again because we're actually at target on inflation. They're going to say, well, we could also be a month and a half away from a no-deal Brexit, which would be very bad for the economy and require us to reverse course. So you can look at this data right now and say it's okay, but I mean, we're not seeing it's not too devastating. But at the same time, it's what happens over the next 6 weeks which is going to really determine it. And the Bank of England can't really make a decision on what ifs and buts. They have to kind of wait this out and see where we stand going into November before they react. What they're going to be doing now is planning for worst case scenarios so that when things happen, like after the referendum result, they can come straight out and say, we are going to do X, Y and Z to support the economy, and make sure that they can be the people who are reassuring the markets, reassuring investors, probably more importantly, reassuring households and businesses that the economy is going to be supported as best as possible through this period.